Hi, sorry for interrupt you. May I ask you a question?
What's up, bro? No problem. What it is?
Which one are you prefer, Islamic banking or conventional banking?
Islamic banking. Why? Let me show you my G, how it does work. Islamic bank is ethical banking system which completely prohibited interest and operate according to Islamic law. Islamic banking is asset bias financing and allow prohibited elements. As example, Islamic bank does not have invest on businesses that have elements of gambling or whining. Here is the principles of Islamic bank: no interest charge, both parties face losses, all transaction must be linked to real assets or services, invest in halal businesses, contract follow Sharia law. But, conventional bank is different, that is limited to the monetary affairs and to the monetary markets with a purpose to gain benefits and rightly and wrongly. Principles of conventional bank: it is charge interest. The borrower takes all the risks. No need tie with specific assets. Invest in any type of businesses that making profits. Contract based on legal agreements. Interest. Islamic banks do not charge interest, instead, they make money through profit sharing and trade. But conventional banks charge interest on loans. You need to pay back when you borrow money with the interest charge. Risk sharing. Islamic banking: in Islamic finance, both the bank and the customer share the risks. For instance, if a project fails, both parties face some losses together. This is often done through profit-sharing agreements. In conventional banking, the borrower takes all the risks. You have to repay the loan regardless of whether your project sucks or fails. Ethical investment. Islamic banks only invest in businesses that are considered halal. They avoid industries like alcohol, gambling, and anything else that goes against Islamic principles. But the conventional banks goes backward, because it can invest in any industry, focusing mainly on making profits without specific ethical guidelines. Asset-backed financing. For Islamic banks, all transaction must be linked to real assets or services. This means that if you get a loans, it should be for something tangible, like buying a house or a car. And for conventional banks, it can give loans without needing to tie them to specific assets. They look mainly at your credit history. Ethical conduct of Islamic banking compared to conventional banking. Islamic banking is known for its ethical conduct because it prohibits interest-based transaction, which are considered riba. Islamic banking: the absence of interest-based riba transaction. Riba, also known as interest on debt and interest charges, which is forbidden in Islam. Then, Islamic banking has eliminated riba to demonstrate justice and honesty in financing matters. Riba also considered unjust and exploitative. The absence of interest, riba, in Islamic banking reflect ethical conduct due it promotes fairness and equity by ensuring no party exploits another. Conventional banking operates with interest-based system. Conventional banking requires borrowers to pay fixed. Conventional banking does not demonstrate ethical conduct, as compounding interest in cases of default can burden individuals and lead to inequality. To sum up, the absence of interest-based riba transaction is one of the major ethical principles and is very important to continue developing a community. Example of Islamic banking. Practice prohibit riba in Malaysia. In contrast with conventional banking. Islamic banking in Malaysia, like Bank Islam, used murabaha contracts instead of riba finance purchases. Murabaha is a cost-plus financing where the bank buys an item for the customer, sells it at marked-up price disclosed up front, and the customer repays in installments. Murabaha show unethical conduct because the bank will tell you the cost, price, and the profit they are charging. It's also no hidden interest compared. to conventional banking. In summary, Islamic banking promotes ethical than conventional banking due the transaction is transparent and compliant with Islamic principles.
Professional conduct between Islamic banking and conventional banking.
Gilding principles. Islamic banking operates according to Sharia, Islamic law, emphasizing fairness, transparency, and ethical practices. Prohibited practices include charging interest, riba, and engaging in transactions involving uncertainty, gharar, or prohibited activities such as alcohol and gambling. Conventional banking operates based on secular laws and profit maximization principles. Interest-based transactions and leveraging risk are common and acceptable. Islamic banking has a strong emphasis on contributing to social and economic welfare, including practices like zakat, charity, and interest-free microfinancing.
Then, conventional banking community welfare. Initiatives are optional and often part of corporate social responsibility, CSR, programs.
Example case: Tan Sri Khalid Ibrahim vs. Bank Islam Malaysia Berhad 2013. What is happening in this case? The plaintiff is concerned about whether the BBA, by Bitham and Agil, loan agreement between Tan Sri Khalid and Bank Islam is a contract that adhered to Sharia principles or not, specifically the prohibition of riba, interest. The plaintiff didn't like the way the bank was charging him for the loan. He thought the extra money, profit, the bank was charging him looked like riba. Case highlights the importance of ethical transparency in Islamic banking. A reminder for the Islamic bank to enhance ethical standards by prioritizing transparency and professional. To sum up, this case demonstrates the importance of ethical and professional conduct in ensuring public trust in Islamic banking. Examples of banking practices in Malaysia. For Islamic banking, RHB Islamic Bank's Takaful products. RHB offers Islamic insurance, Takaful, products that operate on the principles of mutual assistance and risk sharing among participants. Customers contribute to a pool, which is then used to provide financial assistance to those in need, ensuring compliance with Islamic values. And for conventional banking, Hong Leong Bank's home financing. Hong Leong offers various home loan products with fixed or variable interest rates. The loans are structured to provide customers with flexibility in repayment terms, but they operate on an interest-based model, where the bank earns income through interest payments. So, do you understand now?
Yes, I understand how it's worked now. Thank you, my friend.
No problem, my G.